Hello, everyone. Thanks for tuning in to Stock Market Jobber. So, today, I guess, was a big day, right? Everyone's been waiting for the Fed and Powell and blah, 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 and yada, yada, yada. But I think the market was kind of going higher on this narrative that, oh, the Fed is not going to raise rates because of what's going on in banking. Now, 98% of the time, when you hear some news story or you're watching, well, hopefully, I tell my stock market jobber crew not to watch CNBC, but you probably hear it from CNBC or in some chat room, right? That there was going to be this thing where the Fed was not going to raise rates because of the banks, and that's going to be good. Higher rates are bad for markets for a few reasons. One is that, well, I should say bad for equity markets. One is that if we get higher rates, well, there's competition to stocks. People could take their money out of the stock market and go buy a CD. That now the CDs are paying 5 or 6%. The other reason why they're bad for markets is that companies don't take money out of the cash register to pay their day-to-day operational costs. They borrow money in the short term from banks. So if the interest rates are higher, they have to pay more money, and that comes right out of the bottom line. So once again, the narrative was wrong. Hopefully, if you're a member of stockmarketjobber.com, and you really need to sign up and subscribe for our YouTube page here, um, this is not coming as a surprise at all. So let's look at SPY here, right? And as always, we got to look at what are the important price levels because knowing where the important price levels are is like having a map. Notice how this 390 level was support, then it became resistance, then it became support, then it became resistance, then it became support. Now, there's a good chance that the importance of this level has been negated, right? If that's even a word. But if we keep going lower, I think we get a bounce off of 382 because that was this uh, recent bottom here. And we probably get a little bit of a bounce, and then we go down here, and we get to 377. Levels that were support can retain their importance for a while. So let's get a closer looking picture of this. Okay, so we can see here, right? Resistance became support. People sold here, and when the price went higher, they regret doing so. So a lot of them say, I'm going to buy my shares back, but only if I can get them at the same price I sold them at. So we have remorseful sellers placing buy orders at the level that was resistance. Here we have support becomes resistance. This is the opposite. This is buyer's remorse. Investors who bought here regret doing so when the price went lower. So they tell themselves, if I can get out at break even, I'm going to. So we have remorseful buyers placing sell orders around the level they bought at. If there's enough of these sell orders, the level that was support turns into resistance. So we can see this on pretty much any chart. But here's today, all right, big nasty reversal. We got all the way up here. We closed all the way down here. Most of the time when something closes on the lows of the day, it's a sign that the sell-off is going to continue. There's no kind of rebound. There's no bottom fishers, or what we call them, coming in to buy. So today's action was really negative, and I would be surprised if we don't continue to go lower. Now, again, down here is the 382 level. Levels that were support can retain their importance for a while. There's a couple of reasons for this. One of them is that we have short sellers who sold, who once the market goes, I remember short sellers want the market to go down. That's how they profit. Most investors want to buy low and sell high. A short seller wants to sell high and buy low. They do the selling first and they go to buy back later. But so anyway, if we get down to 382, there's a good chance we see some kind of a bounce. I think this 390 level has kind of been negated. It was important for almost a year. Really nasty action, right? Rallied up to here, closed at the lows of the day, big move lower. Now, we have to remember that this SPY or the S&P 500 is the sum of its parts, all right? There are 11 sectors that make up the S&P 500 and different sectors are in the driver's seat at different times. Sometimes it's technology, sometimes it's healthcare. Over the last week or so, it's been financials. Different things have more or less influence as we move on, right, through time. Now, if you can understand this and if you could figure out what sector is the most important at the time, it's going to really help you get a good insight onto where SPY is going to go. And that's why you should sign up for our YouTube channel because that's what we do here. in our SPY preview. We look at the sectors. Now let's go to the sectors. And again, remember, this is the sum of its parts. There's 11 sectors. We have to look at the sectors to get insight into what's going on here. Here is their biggest sector of the market, technology. It's about 28%. Notice we have resistance here. Resistance here. Today we got all the way up to here and we came all the way back down and closed below this level. Why would a resistance level remain intact? Well, it could be buyer's remorse. There's people who bought up here. When the price went lower, they regret doing so. They say, if the price gets back to where I bought, I'm going to sell. So here we have remorseful buyers, placing sellers. So this isn't support turning into resistance. This is resistance retaining its support for a while. Nasty reversal, closed on the lows, got all the way up to here, came all the way back to here. When we think about trends, I think it's a good analogy to think about teams, right? Here we have the blue team, and hopefully this is UConn. Well, actually, no, because there's going to be a reversal against the Razorbacks tomorrow. But anyway, the blue team is in charge. The red team takes over. The blue team is in charge. The red team takes over. When we look for these trend changes, we want to look to see who's the leadership. Is it the bulls or the bears? And what I teach my students is that it's not important to remember what the name of the pattern is. A lot of technical analysis students or people that are just starting out, they get too caught up in saying, oh, this is this pattern, this is that pattern, so forth and so on. It doesn't matter what the pattern's called. No one's going to pay you for saying, oh, gee, here's this pattern, here's that pattern. What's going to pay you is the market if you understand how we go through these trend changes. Blue team in charge, red team takes over. Blue team in charge, red team takes over. Blue team in charge, and now it looks like the red team is taking over again. So obviously we got to watch this biggest sector of the market. Looks like there will be some follow through tomorrow. Good chance we get a bounce if we get down to here, around 139. All right, so that's the biggest sector of the market. Second biggest is healthcare. Resistance becomes support. Support becomes resistance. All right? Resistance becomes support. Seller's remorse. Remorseful sellers want to buy their shares back at the same price they sold them at. If there's enough of these if there's enough of these remorseful sellers placing buy orders at the resistance level, it turns into support like here. Here we have support becoming resistance, buyer's remorse. This just shows you how important understanding where these levels are. You can see it in pretty much almost any chart, resistance, support. But anyway, we've been hovering around this 127 level, nasty reversal today. Now, this is kind of telling because a lot of times when the market gets weaker, money flows into what sectors are considered safe. We call this the flight to safety. And when the flight to safety breaks down, there's a good chance the market moves significantly lower. Why is healthcare considered safer than technology? Well, I mean, people need healthcare. Good economy, bad economy, regardless. People need healthcare. But this is a nasty reversal, and this looks like there's going to be some follow through here. So now we've seen the two biggest sectors in the market, healthcare and technology, which are basically about 40% of the S&P 500, showing weak action. I think the market moved higher on this kind of pipe dream narrative that the Fed's going to stop raising rates or whatever. I mean, inflation is out there. It's a weird time in our history of the country, right? It's like we have inflation, but we have a strong job market. But that could turn really quick. I mean, think of the layoffs that have been going on in the tech sector. We got these higher interest rates. We got an administration that just has no freaking clue what the hell they're doing. And not just in terms of policy or financial, in terms of, oh, gee, let's have an energy policy that makes oil go from 32 to 100. And then when Russia uses that higher oil price to sell oil to invade Ukraine, let's say, it was Putin's price hike, even though it was the energy policy that led to the war. So we have an energy policy that has led to war and famine, all right? So I don't care what your political views are, left, right, regardless, conservative, liberal. I am pretty much an independent. but I say it like it is. All right. The decision to basically say, oh, gee, I'm the president, I'm gonna throw oil executives into jail, has made oil companies not want to increase their production. I mean, if you owned a business and you thought there was a chance that in 6 months they could come in and shut you down and send you to jail, you're not going to do it. So this energy policy has led literally to war and famine. There's one of the biggest famines going on in the history of the world right now in northern Africa because people can't afford to buy the grain that is now much higher priced because oil went higher. And there's also this massive famine in Afghanistan. So, regardless of your political side, I mean, I think you got to acknowledge that we're dealing with some really, really incompetent people, right? All right, well, whatever. I just want to vent because I'm sorry if it bothers me that millions of people are starving to death or dying in a war. So, anyway, let me go on to our next chart here. And here is our financials, right? This has been in the driver's seat. And what's kind of worrisome is that we got this big move lower today, despite all this talk of the banking system is stable, it's safe. We got JP Morgan trying to bail out banks. They're still moving lower. PacWest, which is the bank, said they were taking moves to strengthen their balance sheet. Price went lower. This FRC, First Reserve, whatever the hell it's called, despite all the JP Morgan attempted efforts to save it, it's going lower. So I wouldn't be so sure that things are safe. The market is never wrong. Politicians are wrong, pundits are wrong, I'm wrong, but the market is never wrong. And we had a big move lower today in financials, and that's in lieu of and despite the fact that there's all these measures being taken to stabilize the sector. So please make sure you check back tomorrow because there are going to be chances to make money in this down market. When markets, it's easy, believe it or not, it's easier to make money in a down market than an up market because markets move lower faster than they go up. And you don't need to be an options trader. You don't need to be a futures trader. If you come to stockmarketjobber.com, you will learn about ETFs that are inverse. In other words, an ETF that goes up when the market goes down. One of the things you might want to look at is, I don't have it in this presentation, but FAZ, F-A-Z, is an ETF that is designed to go up in the opposite direction that the financial sector goes. So if the financial sector keeps melting down, that ETF is going to go higher. All right, thank you everyone. Thank you for checking in for today's SPY preview. Once again, make sure you sign up for our YouTube page and check back every day because we do a SPY preview every day during the week. We do a technical analysis lesson in real time and a hell of a lot of other things. All right, thank you everybody. I will see you soon.